In this podcast episode, Ben Shapiro dives into various pressing topics, primarily focusing on the recent significant decline in the stock market, the state of the economy, and the political ramifications of these developments. The episode opens with Shapiro addressing the alarming drop in the stock market, specifically noting that the Dow Jones Industrial Average fell nearly 900 points. This downturn has been attributed to rising recession fears, which have rattled investors and led to a general sense of uncertainty in the market. Shapiro emphasizes that the stock market has been in a state of freefall for several weeks, a trend he had predicted. He explains that when market mechanisms are disrupted, investors tend to withdraw their money, waiting for more stable conditions. The current economic climate is likened to a choppy ocean, where unpredictability can lead to significant consequences, not only for the administration in power, but also for the broader perception of the economy. He cites a Wall Street Journal report indicating that recession fears have eroded Wall Street's previous optimism, which had anticipated the U.S. stock market would be one of the year's biggest winners. Shapiro discusses how President Trump's approval ratings are being affected by these economic concerns, particularly as a recent Emerson poll shows him underwater on economic issues. He notes that while illegal immigration levels are at historic lows, the perception of economic mismanagement could have disastrous effects on Trump's administration and the Republican Party as a whole. The podcast highlights the importance of economic stability for small businesses, which rely on predictability to make investment decisions. A significant portion of the discussion revolves around President Trump's tariff policies and their implications for the economy. Shapiro argues that while Trump has historically favored tariffs, the current approach may be causing more harm than good. He points out that the unpredictability surrounding tariffs, especially against major trading partners like Canada and China, is creating uncertainty for investors and businesses alike. The podcast suggests that Trump's administration's attempts to reshape the global economic order could lead to a perception of America withdrawing from its role as a global leader, which would have negative repercussions for the U.S. economy. Shapiro also addresses the potential consequences of a weaker dollar, which could make U.S. exports cheaper, but also lead to higher inflation and increased borrowing costs. He warns that if the dollar depreciates significantly, it could undermine foreign confidence in U.S. debt, leading to reduced investment and higher interest rates. This situation could spiral into a loss of confidence in U.S. financial assets, further exacerbating economic instability. As the conversation shifts to the political landscape, Shapiro critiques the Democratic Party's focus on issues that he perceives as politically misguided. He highlights the case of Mahmoud Khalil, a Hamas sympathizer and Columbia University student whose deportation has become a focal point for Democrats. Shapiro argues that instead of addressing the economic challenges facing the country, Democrats are rallying behind a figure who openly supports terrorism, which he views as a significant misstep. The podcast underscores the disconnect between the Democratic Party's priorities and the pressing economic concerns of the American public. Shapiro points out that while the stock market is plummeting and recession fears are rising, Democrats are more concerned with defending a Hamas sympathizer than addressing the economic realities that could impact their electoral prospects. He describes this as political malpractice, suggesting that the party's focus on social issues over economic stability could lead to severe consequences in upcoming elections. Shapiro concludes the episode by emphasizing the need for a stable economic environment to ensure the success of businesses and the overall economy. He warns that if the current trajectory continues, the backlash against capitalism and free markets could be significant, particularly if the public perceives that the economic downturn is a result of business practices rather than government policies. He stresses that the American public tends to view economic issues in binary terms, good or bad, without understanding the complexities involved.